Hello everyone, and thanks for watching Edupedia World Videos. In this session we'll discuss another problem of final accounts with some more adjustments. This is the problem which is given to us. So we have been provided the trial balance, and we have to prepare trading and profit and loss and balance sheet for this given trial balance. So let us start, and the first thing that we already know which we have to do is we have to make the adjustments. So we have to pass on the adjustment entries, and after that we can go for either adjusted trial, or we can make the adjustment in the profit and loss and balance sheet only. So let's go and prepare our adjustment entries. So the first entry that we have here is for depreciation on land and building at 5% and motor vehicle at 15%. So you must be remembering the way we have already prepared our journal entry. So as depreciation is an expense, so it must be debited because it is increasing. So depreciation account, I'm not using the narrations and all because I consider you to be smart enough to understand all those things. To land and building, as well to motor vehicle, right? So we have to find the amount now. Let's go back, and here we have land and building that is of 24,000. 5% depreciation for this would be 1200, guess. So you can just use this. Formula, and that would make our calculation more precise. And for motor vehicle, I guess it was 15%. So this is the motor car, and just entering the values, and here we have total depreciation. It will be 3900. So the next thing that we need to do is to pass this depreciation into PL account. So profit loss account, to depreciation. Now the amount remains the same. As in the profit loss account, depreciation is an expense, and on the debit side of profit and loss account we write expenses. So the profit and loss account is debited, and that means the depreciation need to be credited into the debit side of the profit and loss account. So this is the entry, and let's come to the second adjustment now. So here we have interest on loan, that is 5% on the loan. So you have to pass on the entry for this. And interest on loan, it's an expense and it is increasing, so it would be on the debit side. So interest on loan is 5% of the loan amount. The loan amount given is 17,000, but we need to take a look on the trial balance also. If the interest on loan or interest element is present in trial balance or not. So we can see that interest on loan element is already there, and the amount 400 has already been accounted, so we need to pass on the entry for the rest amount. So we need to deduct 400 from this, and the rest amount would be accounted for. So this goes to the loan. The amount is 450. Now the same entry would also be prevailing and would be debited in the profit and loss account. So we have to write PL account to interest on loan. Amount remains the same. And as we can see that interest amount is already present, so what we need to do is just add this interest on loan to the interest already provided in the trial balance. So let's come to the third entry. So the third entry is goods costing 1200 were sent to the customer on sales on return basis for 1400 on March 30, 2006, and has been recorded in the books as actual sales. So this amount of 14,000, rather 1400, was actually not on the part of sales, because it has been written that sale on return basis means the goods have been returned because of maybe some problem with the goods. So and that actually worth 1400 of sales. So the returning needs to be deducted from the sales, as well as cause it has been written that it was recorded in the books of actual sales. So the entry would be like sales account would be debited, because sales is a part of revenue and it is decreasing, so sales account would be debited. And because of sale on, rather we can write return basis, and the amount we know is 1400. So this is it. We'll come to the fourth adjustment. So the next adjustment is of salary outstanding of 1400 rupees. So it's very, the salary outstanding we know is kind of liability, and the salary account, as it has means incurred the expense in the same year, so it needs to be debited, because that is actually the expense for this particular year, as the matching concept says. So salary outstanding is a liability, and it is increasing, so it would be on the credit side, and the amount is again, I guess, 1400. The next entry was in the same line, that rates amounting to 800 are due. So again, come to the same kind of entry, rates to rates outstanding. The amount was given as 800. Just writing the amount. So the next one entry would be the bad debt provision to be brought up to 5% on sundry debtors. So we have to look for the sundry debtors. This is the amount. Okay, so we come to the entry, and bad debts is a kind of expense, and debtors is a kind of asset. So as bad debts are the reason because of why the debtors are decreasing, so the bad debts would be on the debit side and the debtors would be on the credit side. The amount is 5% of debtors, so that would amount to 1910. But we have to check whether means if there is a provision made for the bad debts, and we have a provision of 1420 rupees, so we need to change this amount, and we have to deduct bad debts, rather provision of bad debts, from the sundry debtor amount, and then we have to calculate the new provision. So this is the amount. So we are provisioning, right? So we have to write provision for bad debts, not bad debts. This is provision for bad debts. Okay, or you can write new provision for bad debts to make it more clear, because we had a provision before. So this is new provision for bad debts. Okay, and the amount would be same. Now we come to the next adjustment which we have here is closing stock. So closing stock is an asset. Asset here is increasing, so we'll debit closing stock and that would be to purchases. We can do it in different manner, like we can also write closing stock to trading or closing stock to purchases. Both are right, so you can choose either of them. So next we come to the amount. The amount that was mentioned was 13,700, so 13,700. Okay, so we come to the next entry. That is, goods costing 1,000 were kept away, or rather taken away by the proprietor for his personal use. The entry has not been made, so let's just make the entry. So goods drawn is a kind of expense to the business, and that needs to be deducted from the capital, because the proprietor has deducted it, taken it, and this reduces his capital with the same amount. So 1,000 rupees. Coming to the next entry, we have insurance prepaid. So it's very simple. Prepaid insurance or prepaid expenses are kind of asset for the company. So prepaid insurance, we have to check that whether we have insurance as an expense in our trial balance. So the debit balance, if we'll check, okay, we don't have insurance, so we have to enter that directly into our balance sheet. So prepaid insurance, or it's an asset, and we have to write that. So we need not to make entry for this one. So, but let me just check again once if this shouldn't happen, because there must be an entry for insurance, or there must be a general. Okay, I must have missed out this. So it has been given rates, taxes and insurance, so we need to adjust this amount with our adjustment entry. So prepaid insurance 2 rates and taxes, or rates, whatever we have written as an account. So prepaid insurance was $350. So let's come to the next entry. Provide the manager's commission at 5% on net profit after charging such commission. So this is the important part, after charging such commission. So we have to calculate the manager's commission, and manager's commission is a kind of expense. So it would be debited, and rather it should be like profit and loss account debited by manager's commission. So, but we won't be able to calculate the value right now, because unless and until we calculate the profit before charging the commission, till that point of time we couldn't be able to calculate the manager's commission after charging such commission. So we'll prepare the profit and loss account and rather balance sheet first, and then we'll come back to this part again. So let's come to the next segment, that the preparation of profit and loss account and balance sheet. So first of all, let us prepare a format. So here we'll account expenses, then the amount, writing as revenues or mean gains also, and again the amount. So this would be our profit and loss account. Okay, and we write our balance sheet here, format for our balance sheet. So on the left hand side I'm mentioning liabilities, then amount, assets, and then amount. So starting with the first element of trial balance, which is drawing, so that we'll use later. First of all, our entry will start with if we have any, like you can go for starting it with a flow, or you can make the entries accordingly as the element comes from the trial balance. So drawing, but for drawing we need first capital, so let's just enter capital first. So capital is a liability, and it would be on the credit side, or you can say on the liability side. And the amount we cannot presently calculate, or we can insert a row for adjustments. So that would be a bit easy. So that amount is 60,000, I guess. Sorry, it's 60,000. Okay, so we have to deduct drawing and add net profit loss. So here I'm writing profit, right, add profit, and less drawings. The amount of drawing we know, amount of drawing that is given here is 6,000. So we'll mention that as it is for the deduction. So I'm putting a minus sign. Let's go to the next element, that is sundry debtors. It's a kind of asset, so it would be written on the asset side. Here I am not following any particular sequence as we normally do see in books. Like you can prepare on the basis of liquidity. So you start with the most liquid form at the start, and you end with the least liquid form. So I'm not using that. So I'm using a simple method just to make you understand. So just put sundry debtors at the start. The amount of sundry debtor is known, but we do need to be aware that sundry debtors need to be adjusted. We have some adjustment entries, so we'll keep it safe for the adjustment. We come to the next element, that carriage outwards. So for using carriage, we need first okay, this is carriage, not of purchase, sorry. So this is the part of PL, so just go in the profit and loss account. On the expense side, I make the entry of carriage outwards. Okay, and I'm taking the amount directly from the trial balance. Okay, coming to the next part, that establishment expenses. So this is also a part of your profit and loss account. The amount is 16,194. So taking that also in profit and loss account. Then the next thing that we have is interest on loan. Interest on loan, right here, interest on loan, but we are aware that we have an adjustment. So this amount, and we have, okay, I'm thinking to leaving it right now we'll do the adjustments once only. Okay, we'll do it at the end. First of all, let us make the entries for each element of the trial balance. So coming to cash in hand, so this is a part of balance sheet assets, so we'll write it on asset side, keeping some safe places for adjustment of sundry debtors. We have quite a few for that. So okay, right here, cash in hand, the amount is given as 6100. So next element that we have is stock, so this would be used as opening stock. So we'll write it in trading account, opening stock, the amount is given. We'll just take that amount from here, from the trial balance. Next thing is Motorcar and Asset, so entry would be on the asset side. So write motor car or motor vehicle, you can use. The amount is given, but I'm not taking it in the main amount because we need to deduct depreciation also. So just take the amount 18,000. Then come to the next element, that cash at bank. Now how taking cash at bank? Okay, come to the next element then, land and building, part of an asset. Okay, we are on the asset side only, so land and building, the amount needs to be written here because we need to have adjustments for this. We have adjustments for this, so okay, we have to keep place for this one. Making adjustments also. Okay, fine. Coming to the next element, we have bad debts. Bad debts is an expense, so it would be entered in profit and loss expense side. Bad debts, but we have provisions, so we have to write it in such a way that we can make those adjustments later. So I'll keep some place for safe for this. Come to the next element, purchases, part of profit and loss account. Right, purchases, the amount is, we have to check if we have some purchases return or something. So purchases amount, simultaneously I'll check also that there is purchases return. Yes, so leave a place for adjustment. Come to the next element, sales return. it would be written with sales, so sales part of revenue, so sales amount is taken. Come to the next element after sales return, advertisement part of expense, so and we don't have any adjustment for this, so we can write the element or the amount here only directly into the main account. Okay, come to the next element, carriage inwards part of trading. Okay, then carriage inwards written in trading account, and the amount is this one. Then the next element is rate, taxes, insurance part of expense in profit and loss account, so taking that to be rates and taxes, or rates, taxes and insurance, taxes and insurance. The amount needs an adjustment. You can remember we have insurance prepaid. Okay, we'll keep a place for that also. General expense, no adjustment for that. General expenses, the amount is this one. Bills receivable part of asset, so write bills receivable, and there is no adjustment for it, so we'll write it in the main account, main column for us. Okay, now we are done with the debit side. Now so starting with the first element of credit side, we have creditors part of liability, so as we don't have any adjustment, if I can remember, we can write it in the main column. Then we have capital, which we have already written. We have loan, so we have to include loan on mortgage. The amount needs an adjustment because if I can remember, we have interest on loan. Then we have bad debt provision, so we have to make adjustment of this in the bad debts, so I'll leave it for now. And we come to sales, we have already done it. Purchases return, deduct purchases return from purchases, or I'm writing only return, so the amount is this one. So we can write the total purchases to be this amount reduced by the return. Okay, then we come to the next element, the discount. As it is in credit side, then it must have been received by the business, so write it in the profit and loss account. So write discount. The amount needs no adjustment. I'm writing it in the main column. Then come to the next element, bills payable, part of liability. So I think it has bills payable, needs no adjustment. So just using the amount. Then come to the last element, rent received, part of income, but as it is not an operating income, so it be written in profit and loss account. The amount is 500. We have sales return. If we can check, if we have sales return, yeah, we have sales return, so we have to deduct that from sales, less returns. Amount is this one. Okay, then we have to deduct, say, return basis. Return basis, that was 1400. So again 1400. So the sales amount would be this reduced by sales return and sale on return basis. And we have to adjust the closing stock from the purchase. Purchase would be over, and so you can either deduct closing stock from purchase, or you can add it on the revenue side. Both are fine. So the closing stock was given to be 13,700. 13,700. This hasn't been adjusted, so I'll just deduct the closing stock from purchase. This is fine. Okay, then we'll check each and every element if there is some adjustment required. Okay, okay, goods drawn needs to be deducted from purchase again, because goods would be a part of purchase. Amount was 1000, so this amount will again be deducted. So the actual purchase account would be this one. Okay, fine. Then we have carriage inwards. Okay, so we can go for the calculation of, so let's just calculate the gross profit, because all the elements of gross profit has been figured out. So just take out the sum. Okay, let's just take the sum on this side first. So this would be same, as there is nothing else, so sum would be same. Just don't need to calculate this. Okay, and the sum on this side would be same. So the gross profit will be, we'll take this one and deduct the sum of all expenses from this. So this will be our gross profit. So let's check other adjustments. So interest on loan first. We'll just have to add 450, I guess, which was the extra amount of interest. Okay, interest on loan needs to be added, so we'll add just 450 to this amount, or we should just write it here. Add unaccounted interest, that was 450, so the total amount is this amount plus 450. Okay, now for bad debts. For bad debts we have to first add the new provision that we have already calculated. The amount is for bad debts, new provision for bad debts. Okay, this one, and we have to deduct the old provision. That amount is given in the trial balance. $14.20. So the bad debts amount will be this one added with the new provision. The old provision will be deducted. So now we have rates, taxes. We have to deduct the prepaid insurance. That was, I guess, $350. So the amount deducted with the prepaid. Now we have adjustment for sundry debtors. So first of all, we have to deduct the sales on return basis. Sales on return basis, or I'm simply writing return basis, sale return basis. So we have to deduct that. That was 1400, and then we have to we have no adjustment for this one, so we'll have this amount. Then okay, we have provision also, so we'll deduct provision also, less the new provision. So the new provision, I guess, was 1839, right? So I'll just deduct the return basis and the new provision. So this is our amount. Okay. Next thing is we'll add interest. Add interest. The outstanding interest would be added. That is 450. So okay, we'll add both of these. Then we have depreciation for motor car. That's depreciation. We'll have to check the depreciation amount. Okay, the depreciation amount for motor car was 2700, so we'll write 2700. We'll deduct the depreciation in the motor car, and we have depreciation for land and building also. This amount was 1200, so we'll deduct the depreciation for this also. As well, we'll add the depreciation in PL account. So the amount that we already know is 3900. Next thing that we have is we have to add the prepaid insurance. Here the prepaid insurance amount was 350. So write 350, as well as we'll have to add closing stock. That was of 13,700, I guess. Let me check. Okay, it's 13,700. So let us just once check if there is something missing. Okay, we have to write the outstanding liabilities. Outstanding, we had outstanding something, so we'll just check salaries and rates. Okay, outstanding salaries we'll have to, and outstanding rates. Outstanding rates. Okay, so that amount was salary 1400, and for rates it was rate outstanding 800. Then the manager's commission, it has not been written that it has been paid, so I'll consider that to be outstanding also. So manager's commission, and it is generally outstanding and paid in next year. Commission, so we have to calculate that. Okay, so check if we are missing out anything. Let's I guess everything is more or less prepared. So let's just calculate the net profit. Net profit. And here we'll write gross profit brought down. This would be same. This one added with discount, and this is the sum. I have to take the sum. So sum amount, this one. Okay, so the sum amount remains the same. Profit, you have to calculate the profit before manager's commission. So let's just calculate it in a different sheet. Let's just calculate it here. So we have total sum as this one, then we deduct the sum of these from it. On this we'll charge the commission. Calculating. It was given to be as 5%, I guess. So we'll use this formula, and it is more or less 1488. So we'll write manager's commission. commission to be this amount. And just reduce it to 2. Or you can just round it off as 1489. Okay, now we can calculate the net profit. Okay, so this would be our net profit. So before going on to the next stage, I would just check if I have been missing any data or something. So cross-checking again, we have made the entry for the opening stock, purchases, return, closing stock, goods run. Okay, fine. Okay, so carriage outwards. Okay, fine. Okay, let's just check if there has been some adjustment which has been missing. Depreciation has been done. Okay, loan done. Sales return basis has been incorporated. Sales salary to salary outstanding. So it'll be okay. We haven't incorporated salary yet, so we'll have to add salary, and the salary amount would be just at the outstanding amount. So yes, okay, so profit amount so commission amount will change. We'll have to calculate this one again. So the commission would be 5% of the profit before charging the commission. Okay, there is an error, so we'll calculate it in separate sheet. That would be easy for us. So same manner as we have calculated this one, we'll check if we have been missing anything. I think once I have missed already missed salary once, so I'll check this. Okay, and manager's commission has been on net profit after charging such commission. Okay, so we'll calculate the net profit first. So the net profit or we'll calculate this one after charging commission. Okay, we'll calculate the manager's commission. Here is not here. We'll calculate it here. First we have to calculate the profit before commission. So this would be equal to this amount, and we'll have to deduct the total expenses from salary. Okay, so this is the amount. Okay, have we missed anything? Let's check again. Okay, we have missed one entry here. We have to add the outstanding rates also. So this amount would be different, would be equal to adding this, would be this one. So this is the value. Okay, calculating the manager's commission. So this is the amount, and on this we have to charge 5% commission, and multiplying with this is our commission. So we'll take this amount. So this is the value. Okay, let's again check. We missed out something. So everything is fine here. If we haven't incorporated carriage inwards, so we have to make it C9. We have to deduct that. Okay, now we have manager's commission as 1010. Make it round off. So rounding it off, we can write it 1010. So the net profit would be this amount. We have to deduct the sum of all above accounts starting from salary and ending with manager's commission. So this is the net profit, and we'll add this profit to the capital. So our capital amount would be this plus the profit plus the drawing, and we also have to deduct the goods drawn, that was 1000. We have missed that also. So adding all of these, we have capital. Now I guess I have means we have prepared all of them, so just check the balance on both the sides. And on this side also. The balance. Okay, so we are missing here the manager's commission, so we'll just write out this one. Okay, now as our balance sheet match, so we have completed the question correctly, and it took us a lot of time to complete this one because of some of the errors that might occur any time of your calculation, like this one. Because of the gap I have provided here, I wasn't able to recognize that I haven't incorporated carriage inwards, so that was causing a problem. Or I should rather delete these two. Okay, so here also you can make it look more apt for your study. So hope this video helps you understand how to prepare balance sheet and profit and trading and profit and loss account. Thank you for watching this video.